This is Steve Hayes in London at EPRA's annual conference. I have with me now Patrick Kanters, Managing Director and Head of Global Real Estate for APG. Patrick, welcome.
Thank you.
Could you first give me an overview of how APG sees the global real estate market at the moment?
Going forward, we definitely think that entering the markets, as we did last year and also are still working on this and next year, will provide very decent returns.
And within that picture, how do you see the listed real estate sector in Europe over the next 12 months?
The listed sector obviously over the last month has corrected very severely, where it was trading pretty much around NAV in the European market or even a slight premium. It has now corrected and showing large discounts to NAV. So all in all, if you would compare to the non-listed markets, the listed markets provide you a little more value. Of course, very much depending on specific stocks.
Do you think this is a temporary correction, or is it related to something more structural?
We think on the real estate side it's very much a temporary happening. It is a reaction to capital market events. And of course these capital market events will also affect real estate, so it might also affect, of course, the income generating nature, since consumer confidence has declined, of the real estate investments. But as in any panic time, asset classes are moving in sync, just like we're seeing right now. And I think eventually people will take a more fundamental look at real estate again, and real estate will correct in a positive way to the values that they really embed.
Over the longer term, how do you see the attractiveness of listed real estate versus non-listed funds? Do you favor either side?
No, we have a fully integrated approach. So we actually don't differentiate between listed or non-listed. We just want to take a view on what is the best investment portfolio, what is the best management, what is the best governance structure. But we take a long-term view, and by nature being a real estate investor, you have a long-term view, because also on the non-listed side, it's highly liquid. So by nature, you are a long-term investor. While taking that long-term investment horizon, it really doesn't matter whether you are in listed or non-listed. The risk-return reward is the same, provided you measure long-term, and listed is a full proxy for direct real estate.
So where do you see the biggest threats to the sector generally, and also the biggest opportunities for investing at the moment?
Well, within the European market, stock picking and locations have always been important, but it's getting even more important than before. And it has a lot to do with the fact that, of course, we do not see a strong population growth in most European markets. So it's really about specific cities, about specific locations within that city that can still be very promising. On the other hand, there is a large amount of more secondary real estate in those cities that will show declining populations that are severely at risk.
Patrick, thank you very much.
Thank you.
For this and other industry interviews, please go to REIT.com or EPRA.com.